Everybody, morning. And let's talk about silver some more. Morning, everybody. Good morning, you magnificent monsters. Welcome to the Morning Monster. And, you know, I'll tell you what. I was watching a kid's birthday party, bouncy castles, questionable pizzas, clown that looked like he lost a bar fight with a rainbow, and all the dads, instead of talking about, dad things, lawnmowers, the right way to grill a steak, their kids' uncanny ability to turn a clean room into a disaster zone in less than 3 seconds. They were all huddled in a corner and talking about silver. And silver, the metal of werewolves, fancy spoons, and now apparently the key to early retirement. And my buddy Dave, who just last year thought an ETF was a type of alien from a sci-fi movie, was explaining to everybody how, you know, he's been up 170% on silver. He was showing off his phone like it was a newborn baby. Look at this chart. Beautiful chart, right? And he's not wrong. Silver had a year for the ages. If you listen to me early in 2025, you caught a piece, you got a nice fat gain. I mean, it went from around $29, $30 an ounce to touching 80. That's like 170% gain. Now, to put that in perspective, that's like betting a three-legged horse to win the Kentucky Derby, and then it actually does. It's been a wild, euphoric, absolutely insane ride, and the kind of ride that makes you feel like a genius if you are on the right side. If you're on the wrong side, you probably got FOMO, right? You haven't gotten a piece of silver, you're probably sitting there going, you probably got that itchy, that little itch. You want to get in, you want to get a piece. This is the kind of stuff that makes you think, yeah, this is where the real key is. Years ago, somebody told me, they were like, when you start dreaming about quitting all your job and all the things you can do with the money, that's probably the top. And this is the kind of move that makes you sit there and think about, maybe I should just quit and move to a beach in Bali, But you know better. I know better. We know better. We're the monsters, right? I mean, we know that when everybody is getting rich, when your dentist is telling you to buy silver and the clowns at the birthday parties are discussing commodity futures, that's when the other shoe is about to smack everybody in the face. And that everybody is a size 18 steel-toed boot right now being worn by the two biggest banks on Wall Street. Now, here's the story that's unfolding right now. While everybody's popping champagne, buying silver coins, two grumpy giants are waking up from their winter slumber. TD Securities and Deutsche Bank. And they looked at the silver party and said, not on our watch. They've been pointing to something that sounds incredibly boring, but it's actually the financial equivalent of a Death Star preparing to fire its laser beam at the silver market. And this is called the Bloomberg Commodity Index rebalancing, or as I like to call it, a great reset button for commodities. Now, think of it like this. You have a giant multi-billion-dollar investment fund. Let's call it the BCOM. All right? Bravo, Charlie, Oscar, Mike. This fund is supposed to hold a mix of different things, like some oil, some gold, some corn, and silver. Of course, it has rules, like has to have a diet plan. We have to eat certain things. We have to invest in certain things. It's not supposed to have too much of any one thing. But because silver went on this insane tear last week, the BCOM is now extremely overweight in silver exposure. It's kind of like it went on a diet of pizza and now the pants don't fit. So what does that have to do with anything? What does this have to do with silver? Well, the BCOM is going to be selling silver. A lot of silver to get back to the target weight. How much are we talking? We're talking about a $14 billion worth of silver being dumped on the market starting tomorrow, January 9th, and running for 5 straight days. That's $7 billion in silver alone. To put that in perspective, that's about 17% of all the open interest in silver futures right now. Almost 20%. That's like trying to drain a swimming pool with a fire hose. Think about it. There's a lot more water that can fit through the fire hose in any kind of reasonable time frame. And the banks are practically rubbing their hands together with glee. This is why silver shorts have been shooting up. I mentioned this yesterday. The ZSL. That's ZSL. Zeta, Sierra, Lima, and Zebra. They're calling it a meltdown, a dramatic repricing lower. They're basically saying the retail party probably over for at least a week or two. And the professionals here, we're going to clean it up a little bit. The counter narrative here, slight shift in tone. Normally, this is where the story would end here. The big bad banks come in, they crush the little guy, the price of silver goes back down, and it just goes back to being silver. But this time, there's a twist in this story, a plot twist. This is worthy of a Hollywood blockbuster because while TD and Deutsche Bank are getting ready to hit the big red sell button, another giant, we know them by Goldman Sachs, they're telling a different story right now. Goldman is looking at the situation and saying, hold on a minute, just a minute. This BCOM thing, it's not quite that simple. They're pointing to a potential liquidity squeeze happening in silver. And this one is happening in London, where the majority of silver is actually traded and the price of silver is actually set. See, while everybody else is buying up silver ETFs and coins here in the United States, they're actually talking about physical silver for delivery. And a lot of that silver is no longer in London. It got shipped to the United States because of somebody talking about some sort of tariffs. Now, London is actually the heart of the silver market. Right now, in the London vaults, they're actually low on physical silver for delivery. The vaults are a little bit bare. You can kind of see the floor in the majority of the vault. And when there's not enough of something to go around, supply and demand kicks in. And price tends to go up. And Goldman is saying that this lack of physical silver in the actual London market where physical silver is delivered is making the market incredibly volatile. A little bit of buying can send the price soaring. A little bit of selling can send the price crashing. This is what happens when you got a liquidity problem. They're basically saying the market is a little bit of a tinderbox. The BCOM rebalancing, it's about to throw a wrench in the works a little bit. Things could get interesting, in other words. It's not just a clear-cut story. And if that wasn't enough, we have 2 more wild cards in the deck coming up. First, notorious China. January 1st, they put export controls on silver. They're not just saying they're going to stop exporting it, but they're making it very clear that they can. They made it so that you have to have a permit and you have to be approved to export any silver. It's kind of a power move. It's like saying we control a piece of this market and we have a voice. Don't forget about us. And then there's the U.S. tariff situation still up in the air. We have the Supreme Court case going through tomorrow. Is it legal? Is it not legal? Are we going to have to pay them back? It's like $140, $150 billion problem here. And this uncertainty has a lot of silver still in the New York vaults plunked down for the COMEX. And instead of being available on the global market for delivery, it's locked up in those vaults. So what does all this mean for you, my monsters out there trading the market? Who's trying to make the best decisions we can? It's a beautiful, chaotic mess. So here's kind of how I see it. The short-term play, there's that billion-dollar, 7 to 14, maybe even $20 billion sell-off. It's probably real. It's probably coming. It's probably happening starting tomorrow. It's going to be a rebalancing. It might put some downward pressure on the price of silver over the next week, maybe two. So if you're looking for a short-term trade, you might be tempted to bet against silver, or maybe you just wait for the dip and pick some up. A sale is a sale, right? We get a nice big fat dip. It's an opportunity. If you think this bigger story on silver has still got legs. But what about the bigger picture? This is where it gets interesting, because if Goldman's right, if there's a real physical silver shortage, then that dip could be short-lived and it could be an opportunity. All the fundamentals are still there. The industrial demand is still going up. Retail interest is still off the charts. A recent study showed that 57% of retail investors still expect silver to top $100 an ounce here in 2026. That's a lot of bullishness. But it's not everybody. 57% is just more than half. So how do you get in on the action? Physical silver, of course, is the best way. Coins, bars, the whole shebang. Silverware, however you want to play it. I mean, it's the most direct way to own it, but it's a pain, right? Somebody can steal it. You got to store it. You got to be able to sell it. And you got to be able to sell it for the right price. If your local coin guy likes to jab everybody on the, take a little off the top when you buy, and take a little off the top when you sell, it's not the most liquid, clear-cut market. Now, silver ETFs, I warn about SLV. They failed their audit, but you can buy SLV. The Arbinon funds and the Sprott funds are also out there to compete. You got AGQ, a leveraged way. If you could buy the dip, if you want to buy the dip, you can get exposure without having to, build a vault in your basement. Silver mining stocks, these get a little higher risk, a little more volatility, can be a high risk, high reward type play. You can invest in the companies that actually dig the stuff up out of the ground. If the price of silver goes up, these stocks might go up even more, but if the price goes down, they can get crushed faster than a can that you step on. I mean, maybe you just want to go with a basket of ETFs, basket of these miners in an ETF like the global silver miners, that ticker SIL, Sierra India Lima. Or you can pick up individual stocks like First Majestic, Pan American Silver. So here you have it. There is a real risk for the next week or two. Might cause panic in the streets. Savvy monsters of the markets take the opportunity and buy when there's blood in the streets. That's the smart thing to do. So this is the great silver showdown in the beginning of 2026 here. On one side, you have big banks. On the other side, you have giant reset buttons. And this be calm rebalance is sitting here. We've got everybody kind of ready to flood the market with paper silver sells. That's that BCOM rebalancing. But on the other side, you've got a actual physical silver shortage. The legion of rabid retail investors are out there. Everybody wants a piece of the market. When things are hot, well, things can stay irrational way longer than anybody can stay solvent. So be careful betting against it. Is silver about to crash, or is it about to go to the moon? The honest answer for me, I don't have a crystal ball. I don't know for sure. I got a bag of unicorn dust, but I drink my Monster Energy. I do my best I can, but maybe you should just grab a bag of popcorn and a Monster and watch the show for the next week or so. And if you have some cash ready to deploy, keep it ready. Remember, the market's crazy, and the only thing more dangerous is being wrong with leverage. So stay frosty, my friends. That's it for the monologue today. There are real risks in the market. And jumping over here, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Silver might not do anything. It may not crash. It may not pop. It may just sit right where we are. Unlikely, but it could. Anything's possible. So this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including silver or stocks, options, bonds, forex, futures, cryptos. If you desire somebody to tell you what to do to make the best decisions for you and your family, well, there's people you can hire for that, but nobody's going to take care of you, number one, better than number one. So just learning this stuff and learning how to make your best decisions. Be careful out there, everybody. Permacautious is the name of the game. Skeptical. I'm always a skeptic. Skeptic of anything the market tells me. Here we are, staring down Thursday where there's not a lot of anything happening. We got some unemployment claims. Came in lighter than the forecast. We've got tomorrow with the monthly jobs, the unemployment rate and all that stuff coming out tomorrow. Building permits, housing starts. We'll see how this kind of rocks and rolls. We'll also backfill in the September data that we were missing since the government shut down there in October. So maybe we'll fill it all in. We also have coming up after the market opens tomorrow, consumer sentiment and inflation expectations, and all this stuff's economic news, right? The economy works backwards to the stock market. If you've never heard me say this before, if you're brand new here, make sure you hit the subscribe button and chat with us. Introduce yourself. In economics, when prices are high, people tend to stop buying, run for the hills, right? The solution to high price in commodities is high price in commodities. Funny enough, the higher the price, the more people want to get involved and mine it and produce it. And the only commodity that doesn't work that way is Bitcoin. Now, the stock market is different. When prices are high in the stock market, it's like a moth to the flames. The higher the price of something, the more people jump in. And that creates the bubble, right? You get people telling, I got to tell everybody to buy more. This is always my sign. It's like when you see people, your Uber driver, your window installer, your shoe shiner, your haircut, your barber, your hairstylist, whatever, when they're telling you about stocks, and they're not people that typically mess with stocks or commodities or anything like that, that's a sign that there's a bubble in that. When everybody's talking about AI, and there's people talking about AI and how it's awesome investment and all this stuff that aren't typically investors. They're not typically people that mess with the stock market. They know nothing about any other stock except the stock they're hyping. Probably in a bubble. We're getting close to the top. When we get the initial drop and some consolidation, that's the warning sign that this bubble is about to run out. Now, AI, it's probably got legs. It's probably still got legs for another year or 2, 3, maybe. But eventually, we're going to see something happen. There's going to be a hiccup. People are going to lose money. Silver, same thing. Gold, same thing. Just be careful out there. Be careful, be careful, be careful. Always perma-cautious. Now, looking at stuff that's moving overnight. How do we make money today? Well, man, we got darn close to that top right there yesterday. Really close to that target. Gave it up, came back down, busted through the 30-minute. Now we're under the 30-minute roadmap line. A little bit of a downtrend, but we're at odds here because we're still on top of the hourly roadmap line. If we can break back up through the 618 level, this high, this low, that level sitting right up here. If we take a move right back up through that, odds are we're going to come up here and hit this confluence level right up here. Now this is S&P 500 futures. I'm looking at that because we have overnight price action here. We don't have that here. We just have gaps. Not a big gap today, but there's gaps. Now, interestingly enough, the cash index hit the target and turned down. This could provide us with downside. So the futures aren't necessarily telling us the story. When you got the futures and the cash index telling different stories, roll with the cash. Cash is saying we have down pressure. We hit the target on the upside. Watch out. Looking at the NASDAQ, we did hit the upside right there. Looking at the bigger picture, NASDAQ, still down pressure, still lower highs. Although we have a little series of higher highs. So we've got a little trend going here. If we can break out through that, we could see a bigger pop. But if we break down out of this uptrend of lows, could see a bigger downside. Looking at the cash index for NASDAQ. Similar story. We did bust up through that downtrend of highs. We are back testing it. If we can hold on to it today, upward pressure. Excuse me. Still have upward pressure. So I'll take a look at the gamma exposure maps. Try to put on my night vision goggles for the market at the end of the show. Give you my bias for the day, so stick around to the end. Russell here. Small caps came up slightly lower high. I feel like this is still set for a pop. Maybe even that bigger pop up here, 2,700. We did this retrace. We did this bounce. We're just grinding right in here. That bigger pop right up in there. Now look at this little pullback. You know, we could stall out right here at 2640, but 2700 looks starting to look like confluence up here. We do have a little confluence right there, so obviously we're struggling right there. But it provides the opportunity to pop a little bit bigger. Just be careful. Getting a little bit of conflicting signals. That's what we're seeing. Let's take a look at the market dashboard over here. See what we're cooking with. Haven't looked at this in a couple weeks. So S5TW, this is S&P 500 stocks above their 20-day. We typically oscillate from the top to the bottom, bottom of the top. We've just been hanging out up here. Haven't hit the bottom. This gives potential for a short-term stocks above the 20-day correction. We've spent quite a number of months up in here after we hit the top a few times without touching the bottom. This is 80% of S&P 500 stocks above their 20-day. This is 20%. Usually when we're in a correction, we're down here. Last big correction, April. Spent like a year. This is unusual. If you go back and look at this chart, we don't usually spend a long time It's just not typical that we spend a huge long time without oscillating between the top and the bottom. Just not typical. So probably staring down the potential for a little bit of a flush out. Now it could spike. We could see a spike and then a drop. That could happen. Anything's possible. Look at the medium term. S5 FI, which is the stocks above their 50-day. We tagged it. Same kind of situation. We tagged up to the top and been grinding down. This is kind of due for a visit to the bottom again. Now this one does typically, this does have periods where we don't hit the top or bottom for a while. That's a little more common on the medium term here, but usually we do visit the top and then go visit the bottom. 90% tends to be a major top, and we haven't really hit that since the April bottom. Things have been a little more muted. So we did hit the top at 80. We didn't hit the extreme at 90. We're hanging out in here. We could pop again, but we need to visit the bottom again. Flush out some weak hands. This talks about the 200. This hasn't hit the top. We did that April correction last year, and we came up here and kind of parked in the middle. This could use a little bit of pop. NASDAQ stocks above their 20-day. We're seeing a little more volatility. We came down really freaking close here. Close was probably close enough there. Then we came back up, but we didn't tag the top. So opportunity for this short term to touch the top. NDFI, stocks above their 50-day on the NASDAQ. Got the top, probably pushing for the bottom. Then NASDAQ stocks above their 200-day. Didn't hit the top, but maybe that was close enough. I don't know. Potential come down, potential to come up. So coin flip. Russell, a lot more volatile. Recently been at the top. Hadn't quite hit the bottom since back here in August. So we may see this do more volatile things on the Russell. Hit the top here, haven't hit the bottom. Maybe has some downward pressure, but we can hit the top again before we come down to the bottom. On stocks above their 50-day for Russell. And then Russell 200-day. This one typically stalls out without hitting the 80. Every now and then we get the top, but this one could stall out short of the top and then come back to the bottom again. RSP equal weighted S&P 500 is at target area. We spiked up. We might be able to push up into that 200. If we do that, I would watch out for a bigger pullback. Kind of sets us up for that. Move. This is Bank of America's market bond volatility index. When move breaks above 100, that's usually kicking off a big market correction. We've been pushing this down to epically low levels here. Haven't been down here for quite a few years. So we've reached a kind of calm in the bond market that we haven't had since back in the 2021, coming out of COVID here. Usually calmness brings complacency. Complacency brings a giant correction. So be careful. Be careful, be careful, be careful. That's always... So the market not really telling us anything super clear. But there are some warning signs for the downside. Looking at oil. Still in the downtrend. Downtrend highs, still coming across. Hadn't been able to break higher. Didn't break lower yet. Didn't make a lower low, but I expect this any day now to make a big, just giant flush out. I mean, it could be any day now, could last through like June, but I expect a big flush out down to like high 40s or low 50s, and then we can make a bottom in oil and take off. That might also spark a war in the Middle East. Gold getting a little bit of pullback and might continue. This first move down, retrace into the blue zone. That can be first move down, retrace, next move down, ABC style. We haven't really gotten one of those since a long time, so be careful. This can push down. We can come back down to the roadmap line. The rebalancing thing, gold's involved in that too. We've got 2 red days in silver. Be careful here. This can kick off that bigger downside move. We've got that selling coming in. Now, this could present an opportunity to buy if we get down in here. Roadmap line sitting at 50. That prior fib line 60, where we did a little mini consolidation. This prior high, set of highs back here in the, like 52, 53 area. So that's some key levels. This low right here, 70. Another one to watch. If we get below that 70, probably come down to 60, if not 55 area on silver. Those are kind of the areas to watch. It looks a lot like that bubble pattern. Getting a little bit of chop. Can bring it back down, but then we can go on another one. Bitcoin. As I mentioned yesterday, that was not a bullish breakout pattern. So we're coming back to the bottom of this consolidation, at least back down around 87. And if that proves not able to hold up the price, probably taking a trip down here, which might confirm that we're in crypto winter. Be careful. Could just be a big fake out, but that's a failed breakout. Lower highs on Ethereum. Failed breakout on Bitcoin. Back into consolidation. NKD also still being soft. And if this kicks off a bigger downside, Bitcoin probably going with it. Ethereum probably going with it. NASDAQ probably going with it. This is my global liquidity indicator. So far, failed to break out. Return back down in here. Can we hold a 618 retrace and bounce, or do we break down and go visit the roadmap line? If we do the roadmap line thing, probably going to get a pullback across U.S. equities and crypto. Golly. Got a little bit of purr going on here. Wheezing. Got the roadmap line right there. Probably going to touch it. We reject off of it. Still set for a lower low here as long as we're under the roadmap line. If we break back above it, can back test it from the top. Maybe this was enough correction. We kind of stopped at that 618. So this could set us up for at least, let's kind of draw it on here. If we break through the roadmap line, this low back in September, this high right here in November, this low we just made sets us up for like 101, almost 102. And if we break through 102, can kick off a squeeze. Still a lot of dollar shorts. Dollar short was the big trade coming into 2025 for big banks. Short the dollar. That was a big ongoing trade. Haven't heard a lot about it recently, but short the dollar is still going on. If we get above 102, that thing kicks off. It's partly why Warren Buffett bought a bunch of yen instead of keeping it in dollars. So short dollar, everybody's expecting the dollar to keep going down. This reverses, breaks through 102. that starts the squeeze on the short dollar trade. So watch out for that one. UUP is the way. This one doesn't move very big, but UUP, you can play FXY, FXE, FXB. Different ways to play currencies without leaving the regular stock market, without having to go open a Forex account. Apple, almost to the roadmap line. After we broke down, I've been warning. Coming on down. That's the first support. And we're pushing right on through the breakout right there. So probably coming down to that roadmap line. I didn't see that prior high is holding very well. Now this one down here may hold. You know, the churn we had right there, that one may hold, but if we get below it, this could come on down pretty violently here. It's gonna draw it. This low, that high. So target area, be right there. Be right down in here. If we break on through the roadmap line. Amazon, if we stick this today, we get that close above here, sets up that upside target 264. Google, and turn back on the fib lines there. 337 still in the cards here. I expect it to hit that. That may be the top. If we can push on up to 337, that's about what, $14 higher. You know, it is rejecting a little bit here today, but I expect that to come on up to that 337. Doesn't have to hit it, but that's just the target I would expect. Meta, almost to the test. Darn close. Only been talking about this for a month. Waiting for this to touch right in here. This could be close enough today. This lower low. First move down, retrace. Next move down, lower low. Completes that pattern. So on bounce watch for Meta. If Meta can bounce here, ideally we touch right down in here, this 630. If it can bounce here, break back through the roadmap line, we're on a path for 1100 to 1300 with a price pattern. You may be like, that's full of crap. Cool. We don't have to agree. Microsoft maintained the wedge yesterday. Rejected the breakout, still back down in here. Support right here. If we get below this low back here, probably taking a bigger trip down. 415 would be the downside target area. Nvidia still has not been able to push up. You know, yesterday, despite some of the bullish momentum, nothing. Probably coming back down here if we don't hold the roadmap line, going down for 150, where we made the high in December 2024. For the retest here, these two highs, gonna probably go retest those. So if we come down, break through that right there, probably coming down here and test this area right in here. Tesla, Salah. Oh, baby. That was close enough. That could be the bounce. That's TSLO has the rocket ship pattern. Just want to illustrate this really quickly. For those of you that follow me and know how much I love the rocket ship pattern, look at this right here. This move up, this retrace, 618 right there. Roadmap bounce also right there. Those two combined. Those two powers combined. Now, rocket ship pattern doesn't always work. But the potential for this is off. I mean, I made some of the biggest money when these two patterns line up exactly at the same point. And that's pretty much it right there. What does that present the opportunity for? That high, that low. Talking about a target up here. We're not even paying attention to this target. Possibly up here. These would be the targets. The rocket ship pattern has a habit of exceeding the bullish 1618. So when it works, it usually really, really works. That could be a big upside right there. Now, it can fail. It doesn't have to go. And it definitely depends on Tesla. You know, leverage stuff doesn't always follow the patterns. Just reading into the, the tea leaves here, but this is leveraged Tesla. Tesla could fail. Doesn't have to bounce. But it did the thing that I was looking for. 610. Be the upside target up there. 550 at the minimum. 610. Possibly we get on up to like 800. That'd be pretty crazy, but it's possible. We'll see. Netflix, I am long TSLL. Probably have more exposure to Tesla than anything else right now. Netflix, sitting here, waiting for the market to leave it for dead. I guess it still hadn't bummed enough people out, sufficiently bummed enough people out yet. So this may take another little dip down to the bottom of this box before we can get the bounce up to the roadmap line. Oh, Netflix. All right, I go pull gainers, things moving up $2 or more, things moving down $2 or more. I bring some setups that are ready for a daily chart entry. I hunt for some opportunities in here, see if anything looks good. And NOC, nice little bounce. Northrop Grumman. Trump kind of tweeting about these companies and how they need to modernize and this, that, and the other, and they're not going to be able to pay their CEOs more than so much money, and they're not going to be able to do buybacks and dividends, which I'm not sure I fully understand, but whatever. Looks like 657 next upside. That kicked off the entry a couple days ago, so even on the Trump news, this is still set to go higher. LMT already hit the target. That was the bounce. I mean, the entry was back here a few days ago, back around Christmas, at the target. Boom, shakalaka. AVAV, about to kick off the entry today, 457 the upside. LHX, already hit the target. Man, look at that. That took a while, but boom, right there. Look at that. Shock myself sometimes. Wow. So if this thing's going to keep being bullish, there's the next upside target, 440. HII. That was just being, that didn't break down. It got close, but didn't make it all the way down there. First move, retrace, coming into resistance, 437. Right in here, and then right up here. So it didn't break down. Let's just remove that stuff off there. Decided to do the breakouts. And here's that level, then this level. 574. You can keep that train going. Costco. Look at that. Tag the bottom. Now we're set for another rally. Well, it took forever to do that too. First move down, retrace. Next move down, boom. Hit the bottom target. Next upside. Set for the rally. Targets up here. Could take a while. 1100. GD. General Dynamics. Popping on up. 374. Bloom Energy. It didn't get... Did it touch or did it not touch? Let's see. Didn't actually touch, but going for it. If we get the close above the 618 here, 163 upside. RGC. Looks like that one's going for 111. Kratos, 121. SanDisk. Be careful. This is getting kind of ridiculous. Probably going to get a bigger pullback. Same on XAR, Aerospace and Defense. That may tag that 289. Well, let's see. We did a bounce, so that high, that low. Yeah. 282 and then 300. APLX, 2x leverage, be careful. 2x leverage, be careful. Globus Medical, Biotech, be careful. Got my bulldozer in the way here. ITA didn't actually hit, but Aerospace and Defense. Defense, we're rocking and rolling here. 88, 101. Now remember, when stuff is hitting targets, it's time to, it's back to what I was saying in the beginning there. Higher prices attract more people. It's a sucker's game, though. The people that are buying here are the ones that are ready to cash out. This pattern's played out. Watch out. Very typically, we get a retrace pretty deep. RTX, watch out for the retrace. That's played out. Korea keeps being crazy. ASPC, SPACquisition. I wouldn't touch it. Momentum, watch out for the retrace. That's going to be pretty vicious. GE, watch out for the retrace. That one, that bounce pretty much played out right there. People don't like me to tell you, but be careful on the bounces. Like, that played out. We could get 341, but probably going to get the retrace. Google, topping out. TSM, retrace in order. PLTR. Now, for all the hype in defense stuff, this defense company looks like we're set for a bigger drop. BWXT. There's the bounce. And first move down, retrace, 3 waves. Watch out for the next move down. If we get that breakdown. So here's the... It's kind of a potential to bounce off of that again, but if we get below that, probably coming down here. If we can break up, that's the upside. Hormet Aerospace. Helmet Aerospace. That one's been rocking and rolling, man. Like, no end, no target. Complete garbage. Look at that gap down. I wouldn't touch it. PLTU, leverage PLTR, FlyX, leverage. What the heck? FlyX. Fly exclusive. What if people are buying this thinking it's Fly Aerospace? I've been trading Fly Aerospace. I don't know what FlyX is. Anyway, STZ. If we can break through, bigger upside. That was the downside target. look at, we went a little further down. I was hoping we would hold right up here. Got a little further. Still in the uprights though. That blue zone is the bounce zone. The bounce maybe not as aggressive. We have the downtrend of highs we're gonna have to break through to go on up to the target, but I guess this pulls the target down just a little bit more. Still has potential to come on up here. Yeah, like I said, it does pull the target down just a little bit. Less awesome that we went deeper. That's still the upside potential on STZ. But we got to get the breakout through the roadmap line. Might put me on alert on here. BA still has this bigger upside potential. New highs. This thing could get run into, way on up here, 1,000. It's probably got to bounce and hip hop and bebop along the way. Shield. Another global defense. ETF. Rocking and rolling. At the target, 78 above that. BEX. 2x on Bloom Energy. You want to get a piece of Bloom Energy without buying options. Upside potential 25, 30, maybe even 40. GGLL. That's 2x on Google. ASTS. This is still due for 114 target. ARKQ. Tag the target. Watch out for the retrace. Roku. Target 119. Acon. Garbage. Dumpster fire. Don't touch it. That looks like a dumpster fire. Yeah. I guess not, though. That's a regular split. But has the chart like a dumpster fire. It just doesn't have a reverse split. So I'd be careful on that one. Sats potentially played out. They sold their property to other people, their spectrum, and got supposedly equity in SpaceX, but we'll see what happens. EMBJ just been a march higher. Embrar. SMST. Watch out for that one. Is that a dumpster fire? It is a dumpster fire. Probably come back to the bottom. AGQ. As silver pulls back, this may pull back a lot. Be careful. Let's see. AGQ. It's potential if you wanted to play out for like the end of the month. The options prices are ridiculous here, but you could play in here like buy 170, sell one like 55. Cost you like $7, $8. It's only like a 2x potential. So they've got it pretty much priced out where you can't really do much in here on the leverage chart. And maybe if you're big, bad, and bold, and beautiful, and brave, you could do something, but I'd be very careful on that. Possibly buy. Maybe you could buy a put and sell a credit spread if you really expected this silver to keep pulling back. Or you could just buy some ZSL. Wow, that's beat down and may not respond very well. Be careful as always. Yeah, might not play meta. Mike, I don't know. We'll see. Just because I watch stuff and I'm really excited about it doesn't mean I'll actually ever even play it. Just kind of depends on my feeling at the time. I don't know. It's hard to. PPLT 270. Logi has more. Failed to break out. Look at that. So this may come back down into the 70s here. Before we find support and bounce again. RPM getting crushed. LABU. Biotech leverage, be careful. AEM, probably due for a retrace to the roadmap line, but turning back around a little bit. Looks like silver's trying to salvage the pullback here today. A little bit. EALL, this may be the biggest opportunity if it can break out. This one could be one of the bigger stories of the year that nobody knows or talks about. 364 on Palladium. AU, Shante Gold, due for retrace. Baidu, almost to the target at 155. ABBV, needs to touch the roadmap line. Alcoa, man, look at that ripping. That's one nobody talks about. Look at that that's a 3Xer right there so far, and has potential to break on out. Dang, that's a beautiful potential. Look at that. Ridiculous upside potential. Holy moly. That's crazy. This one might be one that shocks everybody. Holy. Now, I give this like 10% chance of happening. But that's the pattern if it plays out. Got the high, got the low. We're struggling here at the 618. Much more reasonable. It just stops here at this target here and then retraces. That's much more likely. 75% likely, in fact, that we just hit that. That maybe even 5%. There is some confluence right there. That 450. I might have to buy some Alcoa just to see. Dang. Phantom pharmaceutical, drug. Silver miners. Be careful playing that one. IMRX. Let's just go look at the setups. DHT. Oh, that's a beautiful setup right there. Beautiful. Here's the high. Here's the low. Look at this. I'm a trend pullback continuation trader. So trending with pullbacks. There's a bounce. Target 114. No, the statistics don't say anything about this. So 15 trades in the history doesn't give any statistical significance to this ticker. Hadn't been around long enough. So we need more to glean anything from it. But that's the target 14. GILD, another really nice one. There's the high. There's the low. There's the entry. 130 is the target. LTC. And this one's been in it since back here. And almost stopped out right there. Really sideways. I probably wouldn't touch it, but here was the high. Here was the low. Target 3770. MP. Yeah, I wouldn't touch that one either. It's been just sitting on the roadmap line. I need this one to pop up through 77 and give me the 108 target, not, it triggered this little baby target that high and this low and this little target right up in here. I just wouldn't do it right now. Little baby target, little baby bounce, little baby target. TNK, another nice one. Looks like 65 on the target. This one's been in it from back here. 24 target. Vericel. Pharmaceutical. Be careful on pharmaceutical, of course. Entry, target 44. And no real statistics there either. And WK. Last but not least, there's the high, here's the low, there's the entry, 99 target. That one's worked 100% of the time, but it doesn't have any statistical significance. You can flip a coin 8 times in a row and get heads every time. So be careful. that does look like a nice uptrend, pullback, continuation. Don't even need a big upside. Doesn't need to get new highs or anything like that. Doesn't even need to, really break out to get to there. Kind of nice. All right. Bias for the day. This is where it gets interesting, right? Let's see what we got. What we got cooking? Hey, good looking. What you got cooking? So far, we're holding on to this bounce on the 30-minute. I like it. Here's your levels. Watch that 69.40 area. Get above that. Probably going on out to 69.75. Check out the GEX chart. The big level sitting down. Now the bubble. We're here at 690 on SPY. And 693 for this Friday, for tomorrow. It looks like we're probably going to ease it up in here. That's upward pressure for SPY. Have a 400 million level right there at 688, so that's going to be some support right down in there. Check out the Qs. Qs have been pretty weak this year. I mean, we've only had like 4 days, but just don't have a lot. Ooh, look at that. 300 million right there. 610 tomorrow. It's kind of scary. And that 627 still stacked up in there. And then you have this bigger level, 641. It got a little lighter than it was yesterday. Yesterday it was like 300 million, 400 million. So the range in here is pretty freaking huge. And we're kind of parked down here at 620, the big level for next Friday. Sitting there at 627. I hope a bubble shows up. Like there's no bubble in here today. There's no big level at all. 500 million. Yeah, there's the big level. 620. So we got some downside on Qs and upside on SPY. Those two are at odds. Q. And we bounced at 620, so see if we can stick that retrace and go on for the target. That breakout would set us up for a run up here. 645. That 641 is where the big GEX level's sitting. Just below that. So it may come up just shy of there. Got the big level for the monthly sitting right there at the top where we turn down. So there's significant resistance there. If we turn up through that, watch out for the big pop. NASDAQ got a little nasty there. Down to the 30-minute roadmap line. Now, if things turn sour grapes here, if we start down below that 620, with any, basically if we break below this right here, come back down with any kind of force, probably got to revisit that 610 area. Because that's where the bigger level is for the monthly out here for the 16th. So we're kind of boxed in. The box is down to 610, up to 641. That's kind of the playground here. Out to the expiration day next week. We can see volatility, baby. Now, if we get out of the bottom of here, if the Trump tariffs get rejected and causes a panic, we could be down here pretty quickly. And there's a 600 level and a 590 level out there on the monthly. So 600 level is down here. And then a 590 level. And then things can get pretty sparky to the downside. So be careful out there, everybody. Be careful. Have a great day. Be safe. I'll be back 11:30 with Jack, an hour. And we'll be on Market Masters. Links in the description. We throw out the links on Telegram. I try to put them in Discord, but yeah. Otherwise, I'll be back same bat time, same bat channel tomorrow. We'll hunt for opportunity. Try to do the beer money trade. I'll post it on X if I get into something. And I'll see you tomorrow.